right, the president hitting the strong dollar, raising interest rates, doesn't like the fact that in this interview with CNBC, why does this always happen? The economy picks up steam, and then the Federal Reserve decides to whack it with a hike. Other presidents have bemoaned the same thing, but I think thought it or discussed it with their aides. Not saying it for the world to hear. Whether that's a good or bad thing, it depends on how you feel about this sort of thing. Layfield report and the CEO, all-around business market genius, John Layfield, Taxpayers Protection Alliance president, David Williams. David, did it jar you, the president saying what he did, first off, about the Federal Reserve?
Yeah, it really did, because we have a president now that's trying to influence the Federal Reserve. And here's a president now, remember, this is a guy who built his empire on construction and low interest rates.
Right, so, and I can well understand. That's the prism through which he sees life. I can definitely understand that. As president, a little dicey.
But he has to look at the bigger picture of the economy and what higher interest rates really mean. It means that we're going to have more investment in this country. So when the economy is starting to chug along, interest rates will go up. Look at the mid-90s. We had interest rates 3 to 6%. In the mid-90s, we had really good economic growth. So the president needs to take off his construction hat, his hard hat, and look at this, because currency is very complicated, Neil. And he needs to take a step back and realize that there are different things happening. Now, listen, the deficit and the debt, yes, these interest rates going up are going to balloon the interest on the debt. That's a problem. But there's, this is a skirmish in the trade war. The trade war is a bigger thing, but this is a minor skirmish. And as you said, the cost of items are going up, probably in the not too distant future.
Yeah, they're kind of joined at the hip, though, to your fine point, though. And one of the things I asked, John, is now with the president saying he's going to go full throttle again on this trade stuff, he's willing to consider just going after every good that comes from China in this country. What does that mean? Because he is arguing that we have the edge here, saying in the CNBC interview with Joe Kernan that we are playing with the bank's money. And so he feels free to do so.
I would disagree, and I think the market disagrees. I think the market, if they thought that this was going to actually stay on, I mean, once you threaten trade sanctions and the trade war, it's one thing. Once you actually start implementing them like has happened, that's completely different. And the market believes this is probably going to be taken off, but this could completely negate the tax cuts. This is self-sabotage that is completely unnecessary, and I think it could do long-term structural damage to our economy. You look at how the EU is already negotiating with our neighbors right now, Canada and Mexico, trying to get a trade pact. They've already got one with Japan. We're promoting right now isolationism, not necessarily America first. And I think it's a mistake, this trade war, because I don't think we're going to get solved what needs to get solved, and that is dealing with the theft of intellectual property from China.
All right, guys, I do want to bring Kristina Partsinevelos into this, and I do, before I do that, I want to bring your attention to the market itself, which has seen its losses pick up here a little bit, or from the gains, cut down to a third of what we were on this report from the New York Times that his former lawyer, Michael Cohen, might have secretly recorded the president talking about a payoff to this Playboy model. Obviously, anything that could jar or potentially hurt the president, not too surprising, you know how the drill goes, hurts the market. But I must stress, this is just a minor development and a minor sort of a dip for stocks from the levels they were at. I'm not tracing it exclusively to this. I'm just letting you know about it, and that it did have a minor impact on trading. Where we end up, I have no idea. All right, so Kristina, on this trade combination Fed thing, what are people telling you?
Right now, I think I want to agree with John that we shouldn't say that this is not a small deal, especially when talking about the currency comparison between China and here. Why? Because there is the largest corporate default right now in China. We could see some monetary policy happen in China, and that could further depreciate the yuan, which would create a bigger discrepancy between both currencies. We also have uncertainty in the market here.
Which would make the situation worse, right?
Exactly. Right. Exactly. And then you tie that in with this, and we talk about it enough, but it's happening. It's uncertainty amongst American companies right now. They don't know where to go. We're seeing that reflected in wage growth because it's climbing higher, but it's not climbing high enough. They're not. CapEx has increased this past quarter, yes, but still it's not where it should be. We're seeing productivity levels at too low of a level at this point in time. So I feel like it does have a big effect. You can say that, oh, it's a tiny part of the economy when you're talking about the goods that we're importing into the United States, but it's still affecting investor sentiment, business owner sentiment, and that's why I think it's a bigger deal than what some other people may say.
You know, David Williams, one of the things that I'm noticing as a backdrop of this are earnings, and we're still early in the process here. I believe fewer than 20% of the S&P 500 stocks or companies have reported. 8 out of 10 of those with much better than expected numbers, and 7 out of 10 of those, I understand, better than expected guidance. So that's a nice backdrop, and maybe that's what the president goes back to when he talks about playing with the bank's money here and taking on trade from a strong position. What do you think of that?
So I think what's happening is the president is playing one-dimensional chess, and the economy is three-dimensional chess, that there are so many moving pieces to this.
You know, I'm very good at one-dimensional chess, but when you start adding a couple of others, I cash out, but explain that.
So what he's doing is he's trying to protect U.S. jobs. He's trying to protect U.S. consumers and with these tariffs. And now we see the repercussions of that. He's accused the EU of currency manipulation. Are you going to tell me the EU speaks as one voice when you have Germany and you have Greece? I don't think that the EU really is manipulating their currency when you have such diverse voices in the EU. So what he is doing is he is responding to the threat of more tariffs by saying they're manipulating their currency. And that's my concern, is that he's taken this to the next level and he's still at the one-dimensional chessboard, Neil.
All right, that I understand. If you had gone into checkers, I might have had a better shot at understanding. You're so smart. John Layfield, I don't want to, skip all over the place here, but this Michael Cohen revelation in the New York Times, the only one reporting it, that he recorded the president talking about a payoff to this Playboy model, Karen McDougal. I did notice the markets, sliced a lot of their gains there. Without saying that is specifically the reason, it was certainly a catalyst. Markets don't like the uncertainty, obviously, but how does this play out as an effect on what you see going forward?
I don't think it does. I think it certainly hurts the president. It hurts the president's credibility. But those that like the president are still going to like him. Those that dislike him are still going to dislike him. We saw that with the summit.
But from a trader's perspective, I understand that. But your friends abhor uncertainty, right?
Yes, absolutely. But presidential scandals have had almost no effect on the market throughout history. You look at the Lewinsky scandal with the president. You look at the first impeachment with Andrew Johnson that had nothing to do with the market.
I remember covering that.
Scandal,
You're so right. With Andrew Johnson, it could have been a disaster. Kristina,
and he did a great job on it, by the way.
He did a great. He came storming back. Kristina, there are so many variables for this market, this ongoing investigation, the potential of a trade war, the president jawboning the Fed, and as he has going after drug companies, oil companies, you name it. He can be unpredictable, but right now things are going his way, and he is kind of reassuring folks, stick with me on this. How is that being greeted when you talk to guys on Wall Street?
Wait, but do you believe that things are going his way? Yes, we are creating a stir, and yes, he is trying
only through the prism of the markets.
Right, but he's trying to start things, but I feel like there's not an end. We need to know where you want to go with it. If you bring up China and the trade war there, is he going after Made in China 2025? Is he going after the theft of intellectual property, or is he going after the trade imbalance? Or with the EU, what does it take for the United States to stop this trade war? Is it no tariffs? Is it removing the 25% tariffs on SUVs that enter Europe? I feel like there needs to be a definition, and that seems to be what you're seeing with investors, the reports, and all the few guys that I've spoken to, is that they're still trying to figure out how to price in the president of the United States, and that's why you see such volatility when a headline comes out right away. And it's the summertime, too, on top of it, so lower volume.